Airbnb, the company that everyone knows, recently reported earnings for the first quarter of 2024. The results, they beat the Wall Street expectations, but the stock still dropped. Why? The company's stock fell by 8% on 8th May after just few hours, from $157 to $147. Despite the strong earnings, why are the investors so pessimistic? Let's dive in. Airbnb revenue was $2,148 million, up by 18% year-on-year, beating a Wall Street as well as the account management's own estimation. The earning per share was 41 cents year-on-year, an increase of 47%, also ahead of expectations. Margins improved, free cash flow expanded by $1.9 billion. On top of that, operating margins turned positive this year. Having $11 billion in cash has earned the company a significant interest from the bank. Now, let us look into the company's key performance indicators. Total nights and experience growth hit 132 million. Gross booking volume was $22.9 billion. Take rate, the percentage Airbnb gave rose as well. Speaking globally, Airbnb revenues growth is diverse. North America up by 10%, Europe, the Middle East and Africa up by 23%, Latin America up 30% and Asia Pacific over 20%. International growth is key driver for the company. Having overall growth globally is a sign of positive long-term growth. Furthermore, the recent Airbnb strategy of mainstreaming hosting is finally paying off, with active listing up to 18% year-on-year. More guests are trying Airbnb for the first time. Plus, the company expanding into newer international markets like Germany and Brazil in the coming few months. The reason for the drop. Now here's where the things get interesting. Despite all the positives, there was a slight hiccup that caused Airbnb guidance for the next quarter didn't quite meet the lofty expectations of the investors, leading to the dip in the stock price. Investors were hoping for a more robust outlook, but management's forecast signaled a slight slower sales growth trajectory for the next few quarters. This cautious guidance raised concern among investors about the company's ability to sustain its previous growth momentum in the short term. It's important to note that the market tends to react swiftly to any deviations from the expected performance, and Airbnb shows no expectation. While the near-term outlook may seem tempered, the long-term prospect for Airbnb remains promising, with solid potential for the market share expansion and enhanced profitability in the years ahead. With a strong free cash flow and international growth, Airbnb looks solid with they maintain a 40% free cash flow margin and grow revenue by 10% annually. They are in good shape. On top of that, Airbnb themselves believe in just the short-term downturn and are using the aforementioned idle cash for investing in themselves. Management spent $2.3 billion on the stock buyback last year, reducing the share count by 2.6%. Recommendation: as investors, keeping close eye on the booking and free cash flow will be paramount. These metrics not only provide valuable insight into current demand dynamics, but also offer a glimpse into Airbnb's long-term growth potential. So if you're seeking to invest in a small amount and you're looking to watch it grow over the next few years, Airbnb might be your golden ticket.